Mohamed, if Donald Trump wins the election on Tuesday, do we see a similar or a more extreme market reaction to the one we witnessed after Brexit in June?
If Donald Trump wins the election, the first if, and if in his acceptance speech he reiterates his anti-trade rhetoric, so you have two ifs there, then risk markets will sell off significantly.
Give us a sense, Mohamed. I'm going to put you on the spot, but that's what we do. How much does the S&P 500 fall in a day or two? How much does the 10-year yield go up? What happens to the dollar? Give us some percentage moves.
So if the two ifs materialize, I would expect a 5 to 10% decline in the S&P, with the balance of risk towards even a greater decline. Why? Because of liquidity issues. The bond market, the only thing you could say for sure is that corporate bond markets and high-yield bond markets would be hit. And on the other side, TIPS, inflation-protected securities, will do well. Currencies will be in a tug of war, and I think at the end of the day, people may be surprised, but the dollar may end up stronger if the two ifs materialize.
Mohamed, you said last time that you would keep 30% in cash, dry powder. What would you do with that 30% on Wednesday?
So first and foremost, that has been an important call because it's allowed you to stay on the sideline with a lot of resilience and not worry about what has been an 8-day drop in the S&P. I think the message of the market so far this year is that the money is to be made in two ways. One, be more tactical than strategically positioned. So look for overshoots. And two, be very name focused. Name selection matters a great deal. And in particular, you want names with strong balance sheets, a good business model that can take advantage of real disruptions going on from a technological perspective, and good management team. So it's not really great news for most investors that are just buying indices and hoping for the best.
Mohamed, yesterday on Bloomberg Television, Paul Krugman said that the US was, quote, dangerously close to a failed state. And that wasn't even dependent on who wins the election. That's about Congress and how extreme both parties have become and how big the extreme wings have become. I mean, characterize that statement. Is it an overstatement? Are we going to be able to hold on to, our investment grade rating?
Oh, yes, we definitely hold on to an investment grade rating. I don't think that's threatened in any way. But what Professor Krugman was pointing to was the gridlock on Congress and the inability to get anything done, including where there is agreement. There is agreement among many people on the need to improve infrastructure. There's agreement on the need to make the corporate tax system more growth-friendly. And yet no one is willing to be seen collaborating with the other side. In fact, we haven't had a proper budget approval process, a full-year budget approval process in 6 years. So this gridlock is inhibiting the sorts of policy response that you need to unleash what is a huge potential for this economy.
Mohamed, if I can I ask you what exposure you have to UK assets right now?
So I'm a rather boring investor, so I am not exposed to UK names per se. I'm much more barbelled, as you know. I think the time has been for a while to reduce exposure to public markets and have a lot more cash, and then go out the liquidity spectrum to places where central banks have not distorted valuations.